Hello and welcome to another episode of Casual Friday. I'm here with the Duck, and we're going to be talking about the spot ETF, not ETF, as well as other market commentary. Before we get into that, as always, the show is brought to you by WooX. Recently, there's been a big update about the fees and fee structure and staking and all that kind of stuff, which we think is quite good. It's supposed to kind of reduce centralization and improve alt liquidity and a bunch of other stuff. So there is an article which I'll link in the description. You can take a look for yourselves. If you read this on top of my article, then you'll be decently well equipped to make a decision as to whether you want to trade there as one of your venues. And if you do, there's a link that supports the show and gives you zero fees for $100 deposited. So thank you to them, and let's get straight into it. First of all, Don, the market has been, well, it went down, but it kind of stopped. So that's my expert commentary there. But we're starting to push into some sort of high time frame structure. Finally, it feels like
Yes.
as we approach 24-ish and the lower side of 20s, you can start drawing on charts and not be completely lost. And also, we've had some news which I think the market is doing a very weird job of digesting, as far as the Blackrock trust, which is actually an ETF application. So where do you sit with all of this? Has your higher time frame view changed? Do you care about this news? What are kind of the most pertinent things on your radar?
Yeah, I mean, I really want to be bullish. Like I want to be, but it's so hard to be because I mean, the S&P's been nonstop up only, right? Then we get these BlackRock news, which I mean, I think it's gonna at least give some pause to the whole like, okay, is this entire industry a scam kind of narrative that's going on, right? Because everything's been kind of blowing up. Everyone's getting charged left, right, and center. Binance, I think, just like an hour or two ago, got charged by France too
Yep.
for like money laundering stuff. So like we have like all of these like bad news, and that's like at least something where you see that other people than us still are interested in doing something with the market, which I think is at least nice to have a little bit of a pause of all of this negativity. But the market's not really doing anything, right? Like if you compare what Bitcoin's doing to what the S&P is doing, it's still weak. It's still not doing anything really. And yeah, it's hard for me to be bullish even though I want to be bullish, which puts me into a position that I really don't like, which is I just have to sit and ignore all the good and all the bad um, until this kind of clears up. Like I think there's going to be a price impulse at some point that's going to make it clear where this thing wants to go, and I'm just going to wait for that. But it's getting more and more difficult, I think, to sit on the sidelines. But I think it's the best thing to do. So that's kind of my internal struggle, just sitting here forcing myself to do nothing, and it's not easy.
The legacy strength is really staggering. Like the more I look
Yes.
at this stuff, like S&P, Nasdaq. I mean, you and I were mapping out these kind of monthly pre-breakout levels as potential resistance, but even those look somewhat precarious, right? I
Oh
mean,
yeah.
sort of hashtag top things. When you see a lot of momentum going into high time frame resistance, you're like, oh, what if there's no resistance at all? We've all been in that trade.
Yep.
But yeah, I mean, structurally, you can sort of appreciate legacy strength, but also just makes it depressing as to just how weak crypto has been. It's not even that we've been going sideways in this kind of multi-week breakout. We've been drifting lower. And that's so pathetic, right? Because
Yeah.
as we kind of keep droning on about, I do think the two kind of primary catalyst narrative framework type things that participants paying attention to are kind of legacy markets versus crypto, and also crypto news flows, kind of good versus bad and the impact of that, right? And that's all in the context of this larger regulatory cloud. And all of it in crypto just seems kind of shit up until the BlackRock news, which we'll discuss in the news segment. That seems to be some sort of redeeming factor. But everything else in crypto, I mean, lawsuits, SEC, Binance, it's all just really rough. Whereas in legacy world, it's like, yeah, well, we cured inflation, even though that probably comes with an asterisk, and all our markets are up only, basically making all-time highs. So happy days, we survived the worst of it, and then we're looking at each other, being like, is there anyone going to be left at the end of this thing? The divergence is massive.
Yeah.
Although I don't think it's going to stick around forever. Just like the correlation trade didn't stick around forever, and when it broke, as we've seen, it was quite impulsive. I also think the complete decoupling, mega strong equities, zero price action in crypto, that's also not going to stick around forever. So we've got that to navigate through. As far as technicals go, the usual slapstick comedy routine, Don, of talking about the monthly time frame, where there's still nothing to say yet. I think that just
It's
about
getting close,
summarizes it.
though.
It's getting closer, right? In the wrong direction, but at least
Yeah.
it's approaching some sort of support. I think the earliest iteration of that is 23.3-ish, sort of
Yep.
that 24K, the top of the range, and then probably as low as 20K is acceptable, right? 19.4, 20K, the last green candle before the breakdown, that mini consolidation. But we're not there yet. So that's the monthly. The weekly is a curious one. I made a tweet where I was talking about how drift is bad and acceleration is good, and I made that obviously at the Pico bottom because I was hoping that finally this thing would accelerate and kind of put an end to the drift. But then the the Blackrock news came out, and the market kind of took a pause. If this keeps drifting, I'll be very disappointed because that just has to make me a bit more bearish, I guess, or I have to just wait longer in any case. Because you and I have discussed the weird naming kind of culture around this thing of calling it chop, whereas it's anything but. Even if you don't like how it's doing it, this is trending down, I think, on the weekly time frame with lower highs and lower lows. You can draw a trend line through it, the classic Don style, which triggers people and says you're doing it wrong, which is a weird thing to say when you're just literally drawing a trend line, like a line through the trend, as opposed to some, trading tool more than anything. But it's making lower highs and lower lows on the weekly, and that's a crappy view. And it's doing so in a drifting type of fashion, where if you stood in front of it, it just hasn't been a good idea. And I think, as you mentioned in the beginning, these drifts tend to resolve violently. Either the drift turns into acceleration, which is kind of what I was hoping for and still am, and hits support on its kind of peak impulsive leg, or it breaks market structure and sort of XRP 2018, 2019 style reverses 3, 4, 5, 6 weeks of drift downwards in one kind of impulse candle higher. Either of those, I think, are super preferable and make for much better trading opportunities than trading, the drift itself. Like the break from the drift, regardless of the direction, I think is a higher EV play than trading the drift on its own terms or whatever time frame you choose. What do you think of the weekly? So, I mean, do you buy into? Is this still drifting for you? Do you need it to hit support? Do you think the market structure thing is likely? Because we know it kind of wrote off the monthly, but surely the weekly isn't completely useless, right?
Yeah, I mean, we're getting close to support, but we're getting close to support while drifting lower.
Yeah, it's so bad. I
I
hate
fucking
it.
hate that. Like, I don't want to drift into a support, Like, because then what I have to think about and what I usually do think about is when you drift into support, I'm thinking, I mean, this could be the bottom time wise, but we could wick down to the next support. And like that, the next support below this kind of like 24 to 22K area is just 20K. So that's kind of like the longer this goes and the slower we go, the more likely I think 20K becomes. And I mean, the good thing is I would be very happy to bid it. That seems like a decent area. But yeah, it's a shitty kind of situation because, like I said at the beginning, I would like to actually buy this thing. I just cannot. And we are approaching support, but the way we do it, I just don't like it. Like, I don't want to buy a support and we have all the time in the world to buy it, especially given the kind of price action that came before it. Like we said, with the drifting, with a bunch of people get positioned and then it goes lower and they're like, but maybe it'll reverse, and they keep on adding or just sit in their position. Because one thing that quick movements do, right, is they push people out of their positions. You see a massive drop and you just long before it, there's a good chance that even if like the next time it goes sideways, you're just gonna close your position. You're gonna be like, I shouldn't have done that. When it's drifting, you're like, oh, but now this candle could reverse it, and then it drifts a little bit lower, and the pain doesn't feel as real to people. At least in my experience, like people just don't close. They keep holding on because I mean, it's much easier to take 10 days of 0.1% down than it is to take one day where it like has a proper move to the downside.
Yes.
And it seems more dangerous, but the actual truth of the matter is, I think, is that the drift is more dangerous because it's going to lull you into false sense of security. And I don't like that. Like, even if this reverses, I mean, this is just not kind of setup where I make money usually, right? Like, if I buy this thing because I want to buy it and it's drifting, there's a good chance that, like, if I take that same kind of trade 10 times, 8 times out of 10, I'm going to lose money either way it goes. and that's just not something I want to trade. So for me, I'm just gonna sit flat. Also on the weekly, I know we have support nearby, and depending on how we hit it, like if we hit 24.3k or something, and then wick lower towards 22, I'm down to buy that. But depending on how we hit it, I would be interested in doing something. But right now, I want to either see strength, right? And this is going to be, I think, best seen on the daily time frame, which would basically just mean going above 27.4. I think that's like a good kind of measurement of strength, because right now we're trading below the consolidation that we had that led to the top. And I would like to trade above there for me to kind of take action, or just to go lower. Either or works for me. But yeah, in this kind of movement, and you can see this on the daily time frame the best, I think. We've had, like, on the 5th of June, we had a massive red candle, right? And the next day we have a massive green candle, and the day afterwards we just reverse half of the green candle and then start bleeding out, right? And this has been the story of this entire month now, basically. Like, you have a move down, you have a move up again, and then you bleed that move all the way down. And so far there's no indication that yesterday is going to be different, right? We haven't had any follow through today, even though, like, the S&P is up a little, even though we had good news come out with the Blackrock situation. And yeah, so I wish I could, and I would, like, if I had to take a position, I would buy, but I don't have to take a position, so I'm kind of glad not to. And that's kind of my stance on this thing.
Yeah, I think that's fair. Also, just to clarify for the audience's sake, and make sure to disagree with me if I get this wrong, but the reason that trading drift, I should phrase this in another way. The reason trading drift, like stepping against drift, sucks is because drift is itself an indication of like a steady trend, right? And the reason that drift breaking makes for a much better reversal trade, especially if it, like, in this case, you have a drift down and then it really pukes and goes sort of vertically down. That doesn't make any sense, but like directly down. That's better because on those types of impulsive moves, you have a higher likelihood of people trading at prices where they don't want to trade at, right? But they're being forced to trade, be it via liquidations or, whatever bands they're using for fair value, whatever it is. Those types of impulsive moves that often correlate with liquidations tend to be more mean reverting in nature. Like those wicks you see at the Pico bottom and the Pico top, there's a really good chance no one actually wanted to buy there or sell there, but they were forced to, by virtue of leverage or whatever other, stop losses or whatever other sort of market microstructure mechanism you might have in mind. So there's no pressure when the market is drifting. That's another way to look at it. Like, no one's forced to do anything. Whereas if you have a kind of impulsive move and people are forced to trade, be it via stops, liquidations, whatever it may be, then you have a kind of those dislocations in the market that are much more mean reverting in nature. So a lot of reversal trades, whatever they're called, whatever terminology they fall under, you're trading with people who don't want to trade at those prices but are forced to. And when you get drift, which is just like a slow market and it's nice and steady, there's no urgency, there's no one caught offside, and that's why stepping in front of that thing is kind of lower probability than something a bit more forcible. That was clumsy, but mentally it's the best explanation I can come up with.
Yeah, I mean, that's exactly right. And in general, when you think about it, right, when the market's going sideways and everyone can take the position that they want to, I mean, it could go up or it could go down, right? And there's no real, like you said, this dislocation of price, right? Like, you're not getting a deal, basically. But when these, like, outsized moves happen, you get a deal, right? It's basically like buying something at a sale, because literally the person that is selling it to you doesn't want to do so. And which just basically means that the edge on that trade that you have is, like, you have some sort of edge most of the time when you buy, like, bigger liquidations, just based on the fact that you're getting a deal from someone that actually doesn't even want to give you the deal, right? Like, it's not even like someone being like, hey, you should buy this from me because you get it cheap. It's like the person is forced to sell. The person really, really doesn't want to, but they have to, and the other way around. So I think that's kind of like the most kind of edge you can have when you get these massive liquidation events in crypto, when you can just basically pick stuff up for way cheaper. They don't really happen too often, and I wouldn't necessarily bet on this turning into one. But for me, there's quite a few people just looking at the market structure, that are underwater but are still holding on. And they could be bailed out by good news. They could be bailed out by the S&P going up more, but they have to be bailed out for this thing to go up. And I think if we don't get good news, and if the S&P doesn't go up, this thing is gonna go down. Which basically, like, if I buy this, it puts me in a shitty situation because I'm relying on something else to push the market up, and I cannot control whether the S&P goes up or down. I cannot control any of that. I would just have to take a bet on a market that I'm not focused on trading, and I don't like that. And the news thing, I don't know what's coming next, right? And so far, the news just been kind of negative. So yeah, I think there's a bunch of people in position that are kind of like in danger, and I don't necessarily want to be one of them. So I'm just gonna take it easy. It's kind of my best advice, which is kind of shitty because when you have these news events like the Blackrock thing, you actually just want to get involved because usually that leads to volatility, but we haven't even seen that yet.
Yeah, I was going to ask. I mean, we'll talk about the ETF stuff at length in the news segment, but I was kind of expecting more market impact. It might be telling on its own that we've had fairly limited market impact to news like this, because you remember in the past we've had like significant trends based on speculation of ETF approval. From like quite low probability bets, according to most reasonable legal analysis at the time, and that's happened more than once. I think you and I have
for years.
I think you and I have traded almost every single like ETF approved type of meme, at least since 2017, and that's kind of been the brunt of them, right? And so those on their own make for a lot of volatility and trend and speculation, whereas this news, as we'll discuss, whether it's higher or lower probability than the previous attempts. I mean, we had a reaction, obviously, but it's kind of muted compared to what you'd expect. I don't want to read into it too much, like, oh, it's good news having a low impact, therefore it's still bearish. Like, I'm not ready to go back and forth on that type of thing, but I think I agree with you that just based on the daily and the weekly market structure plus technicals, it can't be that great given this is how we still look, right?
Yeah. And I legit think the S&P's at resistance. I mean, it could go higher, and it looks kind of low off toppy, as in it could put in a massive daily candle,
right?
To kind of, because a lot of people were bearish this thing, right? I saw a lot of people kind of
What's the recession?
Yeah, they were like,
Mad
oh,
Max
at 4.1 on the S&P, right? At 4.1K, people were like, oh, it's a resistance, it's gonna nuke, blah blah blah, and now it's at 4.4, right? Like, that's a massive gain. I think a lot of people are getting squeezed, and you see this in a lot of the names. Like, I mean, in general, like the AI kind of thing has taken off, and then you see squeezes in the names that are traded a lot, like Tesla, for example, and other things. But it's all going into resistance, and I could see this go higher. I could see this break all-time highs. I'm not really like an S&P trader, but if this, I mean, I've been mapping my Bitcoin trades according to the S&P support resistance, and it's been quite accurate. So I'm not gonna be the guy that buys S&P support on while trading Bitcoin, and then buys S&P resistance too after having had success with buying the supports. Like, that just doesn't really seem right to me. But yeah, that's the main thing. Like, honestly, that's like holding me back, is just based like the area we're trading in is where it's going to decide whether it wants to make new all-time highs or not, and that's something that I don't necessarily want to fade.
Yeah, I mean, my gut feeling, which is maybe worth nothing, maybe worth something, certainly worth less, not worthless, but worth less for the S&P, is just in general, I'm somewhat expecting a trendless 2023. and especially into the usual summer lull, just more kind of rangy, mean reverting markets as a whole. So that view is quite hard to reconcile with everything making new all-time highs and trending into the second half of the year. But it could be the case, right? I mean, I'm not currently expressing that view in the market. Aside from that's kind of my base expectation that it hits resistance at some point and comes down at some point, and the rest of the year is a bit more boring. That's what makes sense to me. But it's one of those classic memes that everyone tells you to go touch grass, and then the market just goes crazy, right? So I'm like
Yeah.
acutely aware of that in the back of my mind. But until proven otherwise, my base case is a kind of trendless market with a bit of a lull into the second half of the year. But I don't know. Take that for what it's worth, which isn't a lot. Going back to crypto, though, I think that's pretty much it for BTC, right? So weekly, still drifting. We described why drifting sucks. It's because drift doesn't lead to urgency, and urgency is when you get your inefficiency, and inefficiency is where you get edge. Therefore, drift has a lower probability of giving you edge. That's a better summary than the mumbling attempt I had earlier. Hopefully that makes sense. As far as levels go, I think Don had a pretty good take. 24 is the earliest, both on the sort of weekly, monthly, whatever. It's just a breakout level. And then the potential wick portion of that is closer to 20k, right? 21, 22, whatever, just basically the other side of that range. I think we'll have an interesting kind of Twitter sphere if the market does initially break 24, because then the argument will be that whole move was a deviation, right? And we're back inside the range now, yada yada. But I still think anything in that area is structure, and that's something we haven't had during this entire drift. We've been reaching for monthly, weekly, daily supports, and we just haven't been having them, which is why leaving the drift to drift has been a better trade. But I think once we start hitting those low to mid 20s, if we get there, you actually have structure on your side, and that's where being a bit more active makes sense, I think. As far as ETH goes, I mean, do you see this as a monthly retest of support, or do you hate this level? The highest monthly close at 1678 or whatever.
I don't like it.
You don't like it?
I don't like it. I
It's
mean,
FUD.
I mean, it's support, yeah, but I don't know. It's not been
Contextually, you don't
really...
like it, do you? You're like, ugh, weak breakout, straight back into it. Rest of the market
Yeah,
looks
exactly.
shit. S&P resistance. Fuck you, basically.
Yeah.
Okay.
I don't like. I like the weekly chart better, and that is finally doing what it's supposed to be doing, which is going down after a false breakout.
That took so long, dude. Like,
yeah,
that was properly agonizing. Because how many weeks is... So once you have the close, 1, 2, 3, 4, 5, 6 weeks. And even on week 7, it sort of just, that's where you had your first impulse of sorts that made a low close. But it was essentially after the failed breakout, which are usually aggressive reversal signs, done 6 weeks at the same price, making you question whether you're like hallucinating. That's a tough one.
Oh, yeah. And I mean... It basically, I think it made the trade so difficult. A lot of people just got out of it. I mean, I was kind of like, oh, this is bearish, but I don't want to take that trade. It played out anyway, and now it's kind of getting to an area of support. But given this is a false breakout of a massive range, I think you'd have to expect this to go quite a bit lower, just TA wise. And the cool thing is that we have a really, really good invalidation on the bearish take now, even better than it was before, like 1940. That area is like was resistance. We got rejected by it, but if we come back up there, I think then you legit, like if you get even close to that, there's a really, really high chance that we go to 2.5, and that makes the trade quite easy because then you can just market buy basically if it goes up, which is quite nice. And makes the whole thing a little bit more tradable. So I'm not hating the down move because it just opens up better trading opportunities. And I think 1940 basically, like if you don't want to short this, and I'm most definitely not going to be shorting ETH, is where the obvious trade is, like anywhere in that region. Like if we just have like a really good candle from here, I think there's a good chance that we're just going to break to the upside.
Well,
and
Don, the last time a German got excited about 1940, it doesn't make me super comfortable, but continue, please.
Shut up. But yeah, otherwise I'm not like I don't really like any supports on the way down either.
Oh, that's cruel. Nothing really, not even for
N-
like pleb bounces.
nah,
Damn.
I like I
Okay.
don't like
So
anything.
it's basically the failed breakout is such a large signal and it has such a clear invalidation that until it's invalidated, unless it mega turbo pukes, just leave this thing to unwind and do whatever it has to do. Because the bet
Yeah,
to trade is either a lot lower or above 1940.
or just basically like Bitcoin nuked and ETH nuked, and
Right.
then you're like, okay, Bitcoin hit support, and I'm just gonna buy ETH because I like it better than Bitcoin, but not necessarily off of ETH levels, right? Because I just don't like the levels. I think you can still buy this on the way down, like, but just use the Bitcoin levels as kind of guide, because these levels they're all just kind of shit. I don't like 1500. I don't like that whole thing is too choppy. Um, I do like 1.1K, but that's
Oof.
so far away, that yeah, I don't know.
Yearly open, Don. No wick.
I
Book it.
but so I think on the ETH front, it just makes sense to look at Bitcoin and decide based on Bitcoin rather than ETH. A good thing for ETH is that it does have a yearly wick. Oh, does it? Oh no, it actually doesn't. I just checked again. It
Oh,
doesn't have.
Don.
Oh.
You're gonna learn. I mean, it doesn't have one yet.
I mean, if you zoom in very, 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 very far,
Let me get my
um,
microscope for this week.
I mean, the low was 1190 and the open was 1195. So it has a $5 wick.
A visible. I mean, look, we're dealing with a gargantuan sample size of like less than 10.
Oh, it's
So,
done it before though. If you just go on the yearly chart on ETH,
is it
uh,
Stamp you're using or which one?
Binance works too. Binance just kind of updated, like retrofitted their shit.
All right.
And you go towards 2017.
Yeah.
There is no wick on that candle, my
Yes, there
friend.
is. I can see it. It's
Oh,
way
you
more.
can barely
Listen, you need to
see it.
clean your monitor because that wick is 10 times more visible than the one we don't have at the moment.
Dude, that is barely visible. You
Also, we've
cannot tell me
officially lost our
otherwise.
minds, right? This is the state of discussion, looking at a yearly chart and being like, is this wick wiki enough? Or is the market going to make new lows? That's like quite an important question to
No,
answer.
because there's no wick on the 2007 candle. At 2017, we're going all the way back to $8.
True. We need to fill that in, right?
Yeah.
Quick and efficiency. Also, to just explain this somewhat esoteric meme with some technical grounding, when we're talking about is there a wick or is there not? Generally speaking, the high time frame candles trade both sides of the open, and you can. I've got a daily open video on my channel which talks about this more. But like on most time frames, certainly the higher time frame ones, monthly, weekly, daily, etc., the market trades both sides of the open. It's just like a feature of market structure, and even in the sort of FTX era, when you had the 4-hour opens that would just drive immediately from there, or some, kind of in the middle of that time period, 2021, 2020, etc., there was just a lot of alpha in fading wickless opens and wickless drives because the market would just mean revert and fill those in. And people essentially extrapolated that to the higher time frames, or it came from the higher time frames. In any case, that relationship kind of applied on all time frames. If you have a significant time frame and the market just kind of drives off the open, usually that would be a sign of eventual mean reversion to fill the open and give the candle a wick on both sides. And so you can see that on the weekly, on the daily, and sometimes there's some alpha there. Again, in the 4-hour opens, daily open drives, or not being super long. If you see an early move, like on Mondays, we used to cover on sort of weekly open, you'd have strong drives on Monday that would often mean revert later in the week. So it gives you like a context clue, I think, right? At best, it's not like a setup per se, but it's a decent context clue. So now we've taken that logic and extrapolated it to the yearly chart, and the yearly doesn't really have a visible high time frame wick, unlike most of the other years before it. So the peak perma bear argument based on this one kind of esoteric data point is that the market will make new lows because of the way we rallied from January without ever trading both sides of the open meaningfully.
I still maintain the view that that's completely crazy.
It's awful, isn't it? It's completely unhinged. It doesn't really make any sense, but it's a good meme, Don. And
It is a good meme.
memes rule the world. So yeah, that's kind of the discourse on the why we're zooming in and deciding whether the market's going to make new lows based on the absence of a wick or not. Let's try to be slightly less unhinged.
Yep.
Also, if that plays out, oh my god. In any case, so weekly ETH, rather, you're fudding. You're saying the weekly failed breakout is so bearish, and all the levels are so garbage that I'm not going to trade ETH unless BTC hits BTC support, and then I'll trade ETH for the beta, or it goes way lower to the other side of the range at like 1.1k.
Yeah.
And everything in between can fuck itself.
You can also see the other way around. I'm like, this is gonna be such a bullish setup if it gets to 19 or 2k again.
Okay, Don, come on. You're like, this is so bearish, but if the so bearish, such a bearish argument gets invalidated, it would be so bullish, but it's so bearish. You're one of those people.
So it's just gonna be such a good setup that I'm like wondering why I would do business here.
Oh
if
man,
I can just take the good setup.
This is so funny. Yeah, it's so bearish. It's not actually bearish. It's just setting up the ground for future bulls to have an amazing setup. Like,
this is what an ETH maxi would say.
That's such cope. It's insane, but I love it. I love it.
But I think trading wise, this is kind of like how you have to think sometimes.
Yeah, for sure.
Just ignore if it's a shit chart, you just fuck this. I'm just not gonna touch it. And then there's oftentimes there's in a shit chart, there's one thing that holds the whole thing together, and if that goes, you can expect the market to do something significant. And I think in this case, that's the 1940 level. If that goes, I think you're gonna see 2.5k, and that's gonna be a significant move. And I think that's gonna be quite fast. And then it's still maybe it goes higher than there. That's just the nearest resistance from 1940, right? There's nothing in between 1940 and 2.5k. So I think just take it for that. Yes, it's bearish. Yeah, it's playing out bearishly. But at least there's a good setup if this invalidates. Yeah. And I'm not going to take the bearish trade that is technically there. I will just only take the bullish trade if we come back up.
To be honest, I can't even criticize you that harshly, because I'm sure I've tweeted to the same effect, being like, look, this failed breakout is hideous, and it's the worst thing I've ever seen, and it's going to zero. But if it gets invalidated, we're in for a jolly good time, and then the market just goes down 50%. So that's fun. But yeah, I think that's fair for ETH. Have you been paying attention to altcoins? We had a mechanical type bounce from the magnitude of the liquidations and just the size of the move with the SEC news, but most of that has just continued to bleed out, to be honest, with some exceptions. But that just seemed like a very sort of, again, mechanical liquidation, mean reverting driven bounce, whatever drivel technical jargon you want to throw at it, which is basically saying if the market goes down a lot really quickly, it'll go up a little sometimes.
Yes.
And it works the other way around as well, and you can attach whatever labels you want to it. But I feel like a lot of those bounces essentially petered out and didn't really do much, and we're back to the breakdown levels in most cases, with some exceptions, but generally speaking, we're not seeing the type of V reversal or anything particularly impulsive on these bounces.
No.
BNB is the one I keep looking at because of all this speculation about, both Binance, but also this 220 level, right? I didn't think it's as explicit as some commentators have made it out to be, that they're using customer funds and selling BTC and propping up BNB and all this type of stuff. I don't personally believe that's true, but you can be completely agnostic on that issue and still acknowledge that 220-ish is like a massive level, and it's like a do or die level, and there's really nothing below it if it breaks. It's kind of like 6k BTC or $20 FTT, if you will. Not to make that comparison, but purely from a chart perspective.
Yeah, the cool thing about this is that if it breaks down, and it's kind of what I'm looking at, because I would never buy it here, right? I don't really understand why I would want to buy it here. Makes no sense to me. It's very clear that Binance is under scrutiny worldwide, basically. And I'm not really getting a discount right now. I feel like the news that hit, they didn't even take Binance as far down, BNB as far down as the other coins, right? BNB is down 23-25%. Atom is actually one of the good one. AVAX, for example, is down a shitload, right? It's the same amount. Wick quite a bit lower. So BNB didn't really take a hit, I feel like in my head space anyway, it didn't take a hit. It just did what everything else did as well. So I'm not getting it at a discount. And I think if you want to be buying this thing, you want to be buying it at a discount. And the cool thing is, if it loses this range, it can deviate below the range and come back up. That'd be bullish. Same setup as ETH, as in like it would be so hideous that if it can come back up, it will look good. But in this case, I think it's kind of needed. Wash out people, go back below the range, and then I think it might actually be interesting for like a long. But I like the best thing to do with BNB is probably just leave it. Because like if you bearish BNB, and I've seen this a lot, like people shorting BNB on Binance, it's the most stupid thing I've ever seen.
That's amazing, isn't it?
Like it's so stupid, because basically like you're betting on, like I said the same thing when people were shorting FTT on FTX, right? And I mean, see where that got them, right? Like you shorted something that went to zero, you made a bajillion, and your money is stuck on the exchange, right? Like the last thing that you want to be doing is shorting an exchange token on the exchange that you're shorting it. Just that you're shorting it on the exchange that you're thinking is gonna go tits up. That's just stupid. So if you're shorting this, short it somewhere else. Then I can at least understand it. But yeah, I don't like the chart. I think it looks like it wants to go lower. I'm surprised it's still holding. But I think if you want to buy this thing, you want to do it lower. If you want to short this thing, like I said, do it on not Binance. And I don't even know if there's any other good avenue to short BNB that doesn't have exposure to Binance itself, right? Because if Binance really does have problems, a lot of the other exchanges will have problems too. And so I think the BNB short is just basically like, if you're shorting BNB, you just would rather just sell all the crypto and move out of the market entirely over shorting BNB. So the short trade doesn't make much sense to me, unless it's just people will go crazy and maybe I can close it 10-20% lower. But if you're targeting like 40, and I've seen some people on Twitter like suggest this, like some bigger accounts, I'm like, you guys are like completely out of your mind. Like if you really think that, sell all your crypto and do something else, because if BNB goes to 40, we will have much bigger problems, and you're probably not going to get paid on your short.
Yes. Anywhere.
Like literally anywhere.
Yeah, the argument, to be clear, is if BNB goes down whatever 80-90% from here to that price target, yeah, it's like 82%, that's probably a sign of just Binance insolvency or some sort of worst case scenario. And the ripple effect there would just nuke absolutely everything. Gox magnitude, entire industry is cooked. So you're
and your coins are zero, the exchanges are fucked, everything is screwed. So
stable coins depeg.
Oh yeah. Stable coins probably go to nothing, and then to 1 million, and then to nothing again.
Missiles flying over your house.
Yes, exactly.
Yeah,
like
Capo is literally the president of the world. You know.
Yeah, but still didn't make a single cent.
Fuck's sake. So yeah, I agree. Making those types of existential bets is just not the way, I think.
No.
Especially if you don't have a clear way as to, if you don't consider A, where you're making that bet so that you can be sure you're getting paid out, and B, the broader implications of the market if your bet comes true. Those are just a couple of things to think about, especially with sort of grandiose types of arguments. But I think most of those are clout driven, to be honest with you.
Yeah, but I think the new market participants actually don't really understand what the fuck they're talking about when they're like, I've seen a lot of the like 2020 kind of and after people be like, hey, I'm shorting this shit to zero, and they like actually like believe what they're saying, and they're doing it on exchanges that have risk associated with Binance going down, right? And then it's like, come on, just learn what the fuck you're actually doing, because this is just, it's a lose-lose situation. You're wrong on your trade and BNB goes up and then you lose money, or you're right on your trade and you lose money regardless.
It's a weird payoff structure, because there is no payoff really.
Yep.
I must say though, I am slightly uncomfortable when price just hugs a level like this with a massive vacuum below it. Yes. Just on a purely technical, forget context, forget payout, forget the ripple effect implications, just in a vacuum, this thing at 220, be on the monthly, on the weekly, however you look at it, just hugging a level like this with nothing below it is just, from maybe it's 6k BTC PTSD, but I just don't like it. To be honest
No,
with you, I'm not a
I
fan.
mean, I really don't. I think if you're targeting 20% lower, actually like a reasonable trade, like you're shorting support, like straight into support, which is usually a really dumb thing to do and could get you here too. But you're basically just betting on the support breaking and then people getting liquidated, and then you just close into those liquidations.
Yeah,
Like that trade, I don't hate too much. You can even take that on Binance. I'm just talking about the people that are like completely unhinged, and for some weird reason, there's way too many of those recently. So
yeah. Don't disagree there. It's also just part of the culture. Like at the moment, we reward sort of breaking news headline, massive insolvency, sort of high impact type of reporting, and people just feel like if they can put a trade that lines up with that, and LARPers, Michael Berry or something, that'll have some sort of payoff down the line. Whereas still, and I know this is hard to believe given how 2022 and 2023 went and is going in the latter case, most of the large sums of money you see made in crypto and the overwhelming reason people are in crypto is because of the uptrends. Is because of what the gains that bull markets bring. And that's where the vast majority of wealth is made. And it's more about just keeping that wealth when market conditions shift, more so than make it by shorting. I've been around since like 2017, like started following early 2017 on like my personal Twitter account or whatever. I know basically zero people who in a meaningful, honest way made more money just having their career being net short crypto than those who are just a lot dumber and have just been long at the right times.
yes,
And traders love to jerk off about, oh, no bias, both sides, whatever, which is kind of commendable in principle. But when you consider crypto as a specific market, you should be in it to have a long bias at the right time, / generally speaking. That should be your rebuttable presumption that I will make the largest returns and the most gains, be it in spot futures or whatever, when this market cycles higher. And if you want to that kind of framework of that's my base case, and then if it's not doing that, I can take some whatever tactical shorts and be defensive. I think that's much better, and on average will have a much higher and better payoff than someone who's saying, oh, I'm just going to be short crypto because altcoins are going to zero. I just don't think in the grand scheme of things, looking at 6, 12, 18, 24 months, or like a multi-year trading career horizon, if your thing is shorting crypto, I just think compared to being long crypto, that they're incomparable. But obviously, because the market's been trending lower, that's super popular at the moment just to fucking short everything, which is fine and reasonable from a trading perspective. But we know from having traded those 2017 onwards cycles that it's very easy to get trapped in that bias as well. Even if you did super well on the short side when the market was cycling down, you get outperformed by dumb bulls like in a 2-month period,
Oh, in a day.
in a day, sometimes in a day. I mean, yes, the counter argument to that is, those dumb bulls won't keep their money and so on and so forth. But like, just purely in terms of returns and just average outcomes for this type of stuff, you're better off being kind of a cautious crypto bull than you are like a super smart bear, I think. I know that position is unpopular given current market conditions. If we said that in middle or peak of 2021, it would sound like we're just being trite and stating the obvious. But it's kind of worth reasserting that given current sentiment plus market conditions, I think.
Yeah. I think in general, like you want to be trading, and this is like I think every trader that says like, oh, I don't care, like up or down, like I'm gonna make my money, whatever. I think they're doing it wrong. Like you want to be trading a market that you can be bullish on. Because if you don't, like if you just like, oh, I want to be like 50-50, whatever, you will never have the outside returns that being bullish brings to you, right? Like markets can go up 10, 20, 100x, they can only go down 100%, right? So like the short side of the stick, like is much shorter. Like you will make way less money shorting something, generally speaking, than longing it. Like the returns are so, like the possible returns are so much greater. So you should be trading a market that you're like technically bullish on, or that you think will go up. Now, that is not necessarily like, that doesn't mean you only have to long, whatever. But I think that should be your preferred thing. And everyone that says they make more money shorting than they're longing, I don't know. Like it seems like a paid group stick to me more so than anything else.
It seems extremely unlikely.
Like it just doesn't make sense. Either they really suck at trading, because like especially in crypto, right? Because in crypto, it just takes you like a week or 2 or 3 where the market goes up where you make gains where other people dream of in a lifetime, right? Like, and then you're telling me that like you shorted these things for 10-20% and you made more. It seems very unlikely to me, and seems like a waste of resources and time where you could just be trading much better. Now, obviously, if you have an edge shorting something and it's just your thing, I don't want to hold you back from it, but I think in general for 99% of the people that are trading in general, they should be looking for a market that they can be bullish on and that they want to be bullish on, because they're going to make much more money that way. And I think the shorting people, they might have like one big win, but they will get chopped up over the next whatever many trading months to years, and give it back. Because generally speaking, markets, as long as you're not trading a completely fraudulent market, tend to go up, right? So you're basically trading something where the outcome is usually up. Like you're counter trading the end of the trade. Like I don't know how to probably explain it, but like for example, Bitcoin, like it's very likely that it goes up in the next 10 years, right? So when you're shorting, like the way that Bitcoin goes up, like you don't know like what it's going to do in between now and in the next 10 years, but you're pretty sure it's going to be up. So if you're shorting, there's a good chance that eventually you're just going to be wrong and it's going to go on the trajectory that you've mapped out, right? Where it goes up. So if you're like, if the probability of that hitting, that low hitting, is like something that can fuck you over, right? When you're like generally thinking a market goes up. So I think you should be looking at longing rather than shorting most of the time. There's just sometimes times where people go too retarded where you can actually make money shorting, but I don't think that should be your base case usual stance at looking at markets. And I know I completely butchered that. It's really hard to explain.
It is, yeah. It's fine. I butchered my drift explanation, so we're clearly on the struggle bus today. But I think you made the point very well, especially in terms of like payoff structure, right? Like it can go down 99%, but then in an uptrend, you have a day where like the mean basket on Binance is up like 20%. You know, like in a single day. It's just not comparable, and it should be clear to our audience who watches us with any consistency that we're not exactly DCA long only Moonboy type characters, right? If anything, you and I suffer from the fact that we're not bullish enough when the market's bullish, so we like make less when the market is aggressively trending up, but we keep more of our gains. And again, we do trade differently. We're not exactly the same person, but I feel like that's a kind of common theme that we have to varying degrees. But just generally speaking, like if you just look at the high time frame charts for like BTC, ETH, etc., and just look at experience, at least ours. You can rely on that from 2017 onwards. Short side traders definitely have windows of outperformance. You can definitely make money shorting, and you should certainly be kind of tactical with your positioning and be taking advantage of kind of set up so you have edge in both directions. All of that is true, but I think generally speaking, if you're going for those, again, as you mentioned, massive trend outsized returns, those are only available on the long side to the same magnitude and not the short side. So that on its own should give you like a larger macro prevailing bias to be skewed towards the upside where it is reasonable to do so, rather than to the downside. I think that's probably the fairest way of articulating it without going into pejorative terms like, oh, dumb bulls make more money than smart bears, yada yada, right?
Yeah.
I think all of that makes sense.
And the funny thing is that a lot of these people that are kind of like, oh, I just like shorting whatever. If you ask them where they think the market is going to be in 10 years, they generally agree that it's going to be up. So they're kind of like counter trading that in itself, which makes trading difficult. When you think something's going to go up, but you're shorting it, that just introduces a bunch of confusion, basically.
Yeah, that's fair. You also pick up like weird trading habits. Like, for example, our generation, because we had to trade the BitMEX PTSD price action, some of us are really bad at trending environments because we're so used to mean reversion and failed breakouts and BARTs and all this type of stuff. So, like, if your prevailing bias in the market is just being short-sighted, like being short biased, then that will affect your trading in what should be the most profitable portion of the market, which is when it's cycling higher. You will think every breakout is a failed breakout. You'll think every gap has to be filled, and everything is like a lower high. Every resistance is going to hold. Like those habits that you develop by being geared towards one side of the market come with a cost. So it's worth considering what that cost is and what kind of habits it's ingraining in you for when the market shifts, whether you'll be able to adjust accordingly. And it obviously applies to bulls as much as bears, but I feel like being ill-equipped for the bullish side can be more expensive than being ill-equipped for the bearish side. I feel like.
Good. As long as you're not introducing leverage, it's almost always the case.
Right. Yeah.
And I mean, if you introduce leverage, there's a way to blow up both sides. So
yeah, I mean that's just the perfect ingredient there.
yeah.
With that tangent aside, which I think was useful. Any other altcoins on your horizon? We talked a bit about XRP in the past and this infinite lawsuit. Catalyst trade, which has been going on for like a year now. It seems like resistance is resisting at 50 cents. For the Litecoin trade, you mentioned you weren't super interested given the proximity to the halving. That's kind of drifted back down to its range lows at sort of low 70s. And everything else is, as we mentioned, had some sort of mechanical recovery from the large outsized move last week, but it's still more or less hanging around those lows as I click through this watch list. And in general, it feels like with the regulatory environment, all the usual. It's funny. The old FUD used to be macro uncertainty. So when you didn't know what the fuck to say, you would just say macro uncertainty. Now you just have to say the regulatory environment, and it's this kind of catch-all phrase to make you sound smart. But unironically, with the regulatory environment plus technical market structure, I can kind of see why altcoins look how they look. And I'm personally, especially without BTC giving me confluence at high time frame support, I'm not rushing to punt any of these on a swing basis. A lot of them just broke down last week and looked like shit, if I had to give a colloquial version. That's really it. What do you think?
I mean, pretty much the exact same. I don't like the look of. I mean, you look at the USD pairs and they look horrendous, and you look at the Bitcoin pairs and they look even worse.
Yeah, somehow.
And I mean, for example, open up AVAX BTC. This one that I mentioned earlier. This is one of the, and this is why I always talk about stop marrying your bags. And I always say it in the bull market, and people laugh about me, and then this shit happens, right? If you turn off the log chart on this thing, it's basically it full retraced the entire bull market. And this looks horrendous still. I don't really see a reason why I would want to get involved in this. And I can show you a million Bitcoin pair charts that look the exact same, right? They're really, really struggling, and there's a bunch of backholders too, right? So when this goes up, a bunch of people that have been seeing other cryptos go up will be very happy to sell and jump into something else, which makes it really hard for this thing to go up. And this is the case for pretty much across the board. All the Bitcoin pairs that I can see right now look horrendous, besides the ones that had a narrative or have a narrative, right? So, I mean, there's a reason why I talked about Litecoin. There's a reason why I talked about XRP. It's because they both had a narrative. The reason why I sold them, basically 10 days ago, whatever, I don't quite remember, but basically why I switched my stance and I was like, okay, enough is enough, is because for XRP, that was a couple of days before the news came out, right? There was this court filing, whatever. I don't even know exactly
Hinman
what it is.
Email, whatever.
Yeah. And I knew that whenever you have this coming, people position themselves before it actually happens. And then you just want to sell a couple of days before, especially if the market is shit. If the market is looking good, you can hold into news, because sometimes then the news just give you outsized gains, you make a 50% day because the news are decent. In this case, I was pretty sure that I wanted to get out before that, and that turned out to be the good decision. It went up quite a bit on that day, but immediately faded it and has been down only since. And with Litecoin, it's pretty much the same thing with the halving, right? I was looking at it because there's a narrative there and you can trade it, but with every day the halving got closer, the trade becomes a worse one, I think, just because a bunch of people will position themselves for it, positioning for upside in this case, and the market is just not giving it because the market has just been very, very shit. No one's been trading altcoins. No one's been trading crypto as a whole. So the moment a bunch of people are allocated already, who's going to buy this thing? And the answer is apparently barely anyone. And that's why I closed my Litecoin position. That's also turned out to be quite a good decision. because that kind of nukes massively on the Bitcoin nuke, right? Like the Bitcoin nuke, quote unquote, is really just like a tiny move to the downside. And that's a couple percent. And then you go through the altcoins and it's 20, 30%. It's also with the SEC news. But Litecoin didn't have anything to do with that, right? I don't think Litecoin is going to be a security or titled as a security at any point during its life cycle, right? It's just, in general, people de-risking altcoins. And I think that's probably going to continue because the negative news that we've been getting is more focused in the altcoin world than anywhere else.
Yeah, totally.
Right? And Binance, for example, it's not like Binance is a Bitcoin exchange. This is crypto exchange, right? Like all this negative news regarding Binance, I think has much more of an impact on the altcoins than it has on Bitcoin, because you can buy Bitcoin on Coinbase. You can buy Bitcoin like in a bunch of different spots. But if you really want to trade altcoins, you kind of have to go to Binance. So I think in general, like altcoins are just fighting an uphill battle, and the lower the interest in trading Bitcoin or crypto as a whole is, the worse it is for altcoins, because they keep inflating away every day, right? Like all of these altcoins, or almost all of them, excluding ETH, are inflationary, and people don't really realize that until a bear market hits, and then you have to have like a couple of millions bought every other, like a couple of millions of dollars bought every other month, just to keep them at the same price. And if altcoins are just not doing well and no one's trading them, where are these millions coming from? And the answer is just none. And you have a bunch of backholders combined with the selling pressure of the project itself, and there's barely any liquidity of people buying stuff. And then you just have a market that looks exactly like ours right now.
Yeah.
Like it completely looks like trash. And that is completely disregarding the fact that the SEC is basically titling almost everything in the altcoin market as a security now. And that comes at a time where the market is so illiquid that this kind of stuff can completely nuke everything.
Yeah, and it has. And the scary part is it's done so without an impulse in BTC and ETH. Like
Yeah.
BTC and ETH have been drifting, and I remember staying up. It was like 4 or 5 a.m. and BTC and ETH were down 2-3%, and I was watching 20, 30, 40% moves on my high cap watch list. You know, market is hella skittish and very illiquid when it comes to altcoins at the moment, and that's without an extra push from the kind of BTC crash effect, which we haven't had. So that's not great. I just don't see strong arguments for altcoins at the moment. And even the whole argument of, oh, you know, alts are getting discounted and they're, whatever that means, right? Alts are getting discounted and they're trading at, you know, yearly opens or yearly lows, etc. Which ones do you think I should accumulate into next cycle? And the answer is most likely virtually none of them, because they will most likely underperform as a whole relative to ETH. They will almost certainly underperform relative to the shiny stuff that comes out when the market is actually bullish. So maybe if you're trying to do like a bottom buy type of strategy, where you buy BTC, ETH, and some allocation to what you think will be like a high beta altcoin that isn't going to go to zero, that I think could be viable again for like a trade. But in terms of, oh, well, you know, I'm just going to accumulate stuff because it's cheap and then sell it much higher, I think the current batch of altcoins, and even at the current prices, to be honest, in terms of purely opportunity, I mean, they will go up, sure. I mean, Neo went up, right? Lisk and all the stuff from 2017, 18, 19, it goes up, but the question is relative to what? And if it's underperforming BTC, ETH, and the shiny new stuff, that's a lot you're missing out on in terms of opportunity cost.
And
just
you're taking much more risk.
Yeah, more risk for fewer returns is just not the best way.
I mean, if you look at new BTC on any time frame, it's pushing new lows. This is making new lows, while Bitcoin is trading still quite a bit above the lows that it's at. Like this kind of stuff is atrocious, and if you're stuck in those altcoins, I mean, there's a chance that this just never makes a new all-time high against Bitcoin. And I would say the chance is actually very, very high. Like I'd say, like most of these altcoins will never go above the all-time highs they set against Bitcoin. They might go, like if Bitcoin goes on a crazy, crazy run, and this is always possible, and this is what bails people out sometimes of their altcoin positions, they might go on a new all-time high against USD. But you could see Bitcoin trading at 200,000, and I guarantee you that Neo would still be 90, 95 to 99% below Bitcoin's all-time high, below the price it had against Bitcoin. As in, like, basically you're down 99%, but you might be up like a 2x from
Up
the
in
previous
USD,
all-time
bro.
high. Up in USD, exactly. But you're taking so much more risk because this thing could go to zero at any time,
Yeah.
right? So it's just tough. It's tough, and I have to explain this, and like we both explain this every single cycle, and it's very, very tiresome to see people be like, "But my coin is not."
Like, I agree with you, but my coins are different. That's the
Yeah,
best
and
one.
it's the worst because everyone has this shit,
Of
right? Like
course.
literally everyone thinks that yes, this is the case. Like at this point, everyone agrees, but it's almost always like, oh, there's like this coin that isn't like that's my
Yes.
coin, and
Magically,
it's not
their
gonna do
bags are
that
the exception to this multi-cycle rule.
because they talk themselves into it over years and years back holding, and then they're like this, but this is the special one. And what you don't realize is that a million other people sitting in other coins think the exact same thing. It's just you being attached to something that has basically I mean, it just has like power over you just because you've been holding it.
Yeah,
so
you're
long.
captured.
Yes.
It's like Stockholm syndrome, really.
That's exactly what I wanted to say. Yeah.
The thing is, maybe this will prove the point. I've got a historical snapshot from CoinMarketCap, Don. 7th of January 2018. And you have to realize, whatever you're feeling about like this altcoin being different and it's really hot, well, it did really well in the bull market. The community is still thriving rather. Like, none of that is new. You could make a kind of bit of a stretch of an argument that, well, the tech is different now, yada yada, but after the most recent kind of securities breakdown, then that's at least the countervailing force worth considering, right? But here's a 2018 CoinMarketCap snapshot, Don. I'm sure you recognize all these names, but this is what the top 20, 30 look like. Just gonna throw some out there. Bitcoin Cash at number 4. NEM at number 6, Stellar at number 9, IOTA at number 10, Dash, Neo, Qtum, Bitcoin Gold, Lisk, Icon, Nano, Siacoin, Bytecoin, XVG, which is Dogecoin Dark.
Oh, yeah, beautiful.
Amizago, BitConnect in the top 30, a literal Ponzi scheme, not like when crypto people call something they don't like a Ponzi scheme. I mean like a literal explicit Ponzi scheme. Populous, Dentacoin, which was dentists of the world having their own coin. You can use it for payments and go to conferences and stuff. Status, Ardor, Stratus, Steam. You remember Steam? That was fun. Justin Sun did like a weird takeover thing, and it was going to be like, oh, everyone's going to move over to Steam for their blog posts, and everyone's going to use Siacoin or Library for their YouTube videos, including PewDiePie or some shit. Like Komodo, the DEX, the early DEX, Dragon Chain, the Disney partnership, Electronium, sick wallet, even though I think that's a different one, but whatever. Gollum, where you could see they had an announcement in 2018. You can see people selling it on their phone because they had tech issues. Like, I can keep going. Arc, which is now taken over by a different Ponzi scheme. It's just insane, right? Basic Attention Token, Loopring, Salt, Kyber, Pivx, the privacy coin, 0x. Like, people, like, whatever you feel about your heaviest altcoin bag at the moment, or whatever shit you want to accumulate for next time round, there's a very high likelihood it ends up like the silly names we're discussing at the moment. Even if the technicals and fundamentals and all that kind of stuff, whatever that means, are different, very likely it'll still end up in the same basket of doing shit relative to ETH and underperforming the market as a whole and not making new highs in BTC and ETH at the very least. And you can go to any year. That's the funny part, right? Like any kind of cycle shifting year, you can do this experiment and just see that the market is extremely cynical when it comes to these things, and you should be too, because it's your job to align with the market, not impose your will on it because you think that the one altcoin you found is different. So I mean, I think honestly, I think our audience doesn't really fall into that capture as much. But hopefully for newer listeners, if we have any, I mean, let us know in the comments about this dead, stagnant channel. But yeah, this might be a useful experiment. Just go to CoinMarketCap, historical snapshot, and you can look at different periods of time and see what the landscape used to look like.
And the crazy part is like people will think like, oh yeah, but I like, especially if you didn't join during that time. Like I've seen all of these, like these communities and all of these people that love those coins. Like if you think back, for example, to Nano, right? And a lot of people will kind of remember Nano. Like that was the coin that the people of Reddit all decided was the best coin. Like there was millions of people like just being, oh, this is the future. No one even like mentioned this thing in the last year. I feel like it's not a thing anymore, and it was the new hot thing, and everyone was talking about it. And this is gonna be the same thing with the current coins. It's just how it is. Like this, how it's always been. ADA was the big one. This cycle was still like a little bit relevant, and this is how it usually goes, right? Like you have you have your hype cycle, and in the next cycle you're a little bit relevant but not as much, but people still like, they're like, oh yeah, I was so into it last cycle, and then they rebuy their
The
bags, or
nostalgia
like,
trade, right?
yeah, exactly. And then it still comes up, and then the cycle afterwards, it barely bounces. And I think this is basically what Neo's been doing, for example. um, there might be sometimes a narrative for something that pushes it up, like we had a China narrative and Neo bounced a little. But at the end of the day, like, they disappear cycle to cycle to cycle. Every single coin disappears, and it really doesn't matter how much you like it. For example, Link, right? Like, Link is the one that I think people, even the newer ones, can kind of like connect with. Um, that was the hottest thing during 2019, right? That was the 2019 to 21 cycle. And now we've had a bunch of altcoins come and go, and a bunch of altcoins going massively up and massively down, and Link's just been bleeding out, right? And the next cycle that we're going to have, the next altcoin cycle, I can tell you that Link is going to bounce again, but it's probably not going to breach its Bitcoin all-time high. It might make, like I said, a USD all-time high, but it probably will not against Bitcoin. And then eventually it's going to fade away. And the reason for all of this, like, if you just think about it logically, it's just very, very simple. It's that it's almost always like you have a bunch of people holding Link now, right? Like, this was distributed over ages and ages. Like, the team's been selling Link for years now. And if you wanted to pump this thing, you would have to pump it through all those cells, right? You would have to kind of get all of these backholders back in profit, and they can just dump on you, right? Like let's say, from a perspective of some outsider, right? Then you want to buy Link. Like, why would you want to be buying Link just to bail people out that can dump on you afterwards, if you can just basically wait for a new coin that does the same thing, right? And this is all open source, so it's not really that difficult to make a new coin that does the same thing, and then you just throw your money at that one. There's no backholders there. There's no people that are jaded. It's just a new coin. It has new excitement. It builds a new community, and you can happily dump on that community, and they're happily gonna buy it from you too, right?
They'll
Like,
thank you for it.
yeah. I mean, this is just how it goes, right? It's it's really, really shitty, obviously, but this is how the game's been played for years and years and years now. No matter how good your coin is, there will just be a new one eventually that comes out where there's no backholders, because every coin goes through a bear market, really. This is like the one thing that's been true. Like, you will just have, like, at some point you will have a downturn, and during that downturn or during the next upturn, someone is just gonna basically steal your idea, or just build on your idea, make a new coin, and distribute that again. And there's so much more money to be made in this, and there's so very little money to be made in buying old coins, that's just how it goes. And there's really no incentive to go with the old coins over the new ones. And this is just a logic argument, right? Like, there's very, very little that is going to change about that. I think, like, crypto isn't used enough. Like, if there was a big use case for anything, and something would get like a name recognition kind of thing going, and you have like a good reason why it stays up, then maybe that'll change. But until that happens, I don't really see any reason for that to change. So it's always going to be the new thing outdoes the old thing eventually, and then it just drifts into obscurity. And there's probably not even going to be liquidity at some point to properly sell. I've gone through this before, back in 2017, where I bought some garbage, and then there was no liquidity for me to sell. Like, if I sold, it would have gone to straight zero. It's just how it goes.
Yeah, I think that's right. And also, even on the usage point, like, Link is pretty much just holds up DeFi, right?
Yes.
So even if you have something that's used, you then have the problem of, because everything is a security, plus everything kind of has to be a governance token, and you can't turn it into what would sort of function as security. Like, oh, you turn on the fee switch and you get some revenue, and it's like a proto equity type of token. We can't have any of that. So you're left with useless governance tokens for the most part. And even those aren't safe, obviously, because now everything is security
Yeah.
as well. And even if it's used like Link, if the tokenomics or whatever other dynamics are there, that on its own clearly isn't good enough. So it's a really fucking high bar to cross. That like once you've had your time in the sun, there's just a really good chance that you're done, really. And somehow that rhymes, which is nice. Also, on the point we were making about bull market versus bear market returns percentage stuff, it's quite funny that, I mean, yes, this is technically a biased snapshot because it's the 7th of January 2018, like pretty much at the blow off top, right? Roughly thereabouts. But just to give you a rough idea, in terms of like the top 20 or the top 30, just reading out some of the 7-day changes. Bitcoin up 17%, XRP up 48%, ETH up 53%, Bitcoin Cash 10, Cardano 40, NEM 77, Litecoin 25, Tron 346, Stellar 84, and it just keeps going. 13, 21, 43, 32, 35, 38, and that's in a week, right? And that's in like just 1 week of bull market, taking the quote unquote least risky opportunities of the top 10, top 15 market cap. Those are what the percentage gains look like, versus being short something, I think that adds some useful context. Again, you can just go to CoinMarketCap and click around on your own and see what all that looks like. Let's zoom through some news, because I'm conscious we've gone over an hour 10 already, and you're not feeling 100%. I tend to have that effect on my friends. I had some memey ones, like the Ask Don Anything. Someone left a comment being like, every Don stream as he says he bought the Pico bottom and he sold the Pico top and he's not in a position. That got like 10 likes. I found that really funny. But I won't make you defend yourself. How about we just talk about the ETF stuff? And
why would I defend myself? it's just true. No, I just had a good year, basically, is what I would say about that one.
Good. Yeah, I mean, you've been very transparent with this kind of stuff anyway. So
yes.
Credit to you, I say, with the most defeated, monotonous way I could. No, but honestly, yeah, I think it's very easy to meme though, right? Because like your approach to it, usually when people have good trades on Twitter, you're supposed to fucking embellish and really lean into it. Whereas a lot of the time, at least on the stream side of things, you're quite nonchalant about it, which is unusual. Like, oh yeah, I bought the bottom and sold the top. I don't know, goodbye, which is not par for the course. So as far as news, let's cover the ETF stuff, right?
Yeah.
So news from the block: BlackRock takes giant leap towards spot Bitcoin ETF with SEC filing. Where'd this article go? Oh, never mind. And there was confirmation from Bloomberg's senior ETF analyst, Eric Balkunas, I probably butchered his name, because some people were basically making the argument that because it's called a trust, that it's not an ETF. And he basically said, to all those saying the BlackRock filing is a trust, not an ETF, do you consider gold or GLD to be an ETF? Well, this is the same thing. Lots of structures under ETF umbrella. Nothing like GBTC. This is the real deal. So as far as kind of legitimate spot ETF instruments go, this is it, right? Both in terms of structure, but also because it's BlackRock, which is, I think, the biggest asset manager in the world, right? And there's an interesting tweet here made by James V. Stratton, who said, apparently the SEC has only once rejected an ETF from BlackRock, which was back in 2014. So their track record is pretty impressive when it comes to this kind of stuff. You don't need to go all conspiratorial like I've been seeing on Twitter. I don't know if you've caught wind of this. Like BlackRock controls the world, and Soros Capital made a thing about coming into crypto, so now this is going to be the new CBDC. You're just basically fucking going off the deep end. Peak American podcast politics is what I call it. It's like, bro, I'm clued into the conspiracy. No one knows this happening, and I'm really I've kind of dismantled the matrix. It's like, okay, where did you get your information? It's like, well, no, it's like, I've got this really esoteric information. It's a podcast with like 10 million views where they shill me vitamins in the middle. It's like, okay, like how secret and how covert is this so-called conspiracy if that's your source of information, right? In any case, we don't need to delve into those particulars. I do think, without being conspiratorial about it, it is a big deal that it's BlackRock. It is a big deal that it's a spot ETF for all intents and purposes. And I don't think BlackRock would go for this type of filing if they didn't have decent kind of like if they weren't sure, as close as you can to being sure that it was going to pass, because they don't just feel like when we had a bunch of failed ETF applications, right? Like Vanek tried a bunch of times, ProShares, and all of those have been rejected. But in terms of just like high profile, I'd be very surprised if BlackRock didn't have like better information or better legal counsel or better assurances, and just kind of went for it for the sake of going for it. So the follow-on arguments you can make for that is either BlackRock thinks there's something legitimate in the industry, and they want a cut of the fees, because that's what it's all about, right? The overarching principle is the business model is you get as much AUM as possible, because more fees is more money. So either they think that's lucrative and profitable, which is good for the industry, because it's some way of saying they're not dead, or the clients want that, or someone in that management structure for their clients wants that, which leads you to the same conclusion that there's something here that isn't dead and it's worth building a dominant product for. So however you slice it, however conspiratorial you want to get, I think getting a real spot ETF would be really good. And at least in the past, if we've had shitty low probability ETFs to be sufficient bull market catalysts, then I can't see why a credible one couldn't be something positive for the market, at least. I mean, we've got our own problems at the moment, but we've speculated on worse, Don, is what I'm trying to say. And this is, out of all the ones we've had from 2017 onwards, this is probably the highest probability one out of all of them. Do you think it's priced in? I mean, how are you navigating this?
No, I think it's finally like a narrative that we can use, because all the other ones kind of blew out, right? Like we had so many good narratives, but basically all the bad news just kind of stuffed all of it. That's a good one. And I do want to say, with the conspiracy side of things, like this is actually one of the conspiracies where I'm not too like most of the conspiracies I see on Twitter, like they're completely wild and just make no sense. The BlackRock thing, like they're actually scary powerful. Like this is
they are, yeah, for sure.
Like there's actually like stuff there. I'd be shocked if there wasn't. Like there's too much power.
Yeah, with that much money,
it's
like Pfizer, right? I mean, let's get straight into it. Like, like the amount they've been fined, just that alone, and the pharmaceutical industry in general, with opioid crisis. Like, I'm not completely ignorant of these things. When you have a ton of money and a ton of special interests, like shady shit happens, right?
Yes.
And I don't think the biggest asset manager in the world is an exception to that. I just don't necessarily subscribe to the confluent soup of BlackRock plus Soros plus CBDC plus bugs, you know, like that type of thing. But the vultures are circling, Don.
Yeah, and I think it's a good thing. I think it's a terrible thing if they got into crypto. The thing is, it's terrible, but it's good for price. Which so
it's a great thing.
it's a great thing. Like at this point, like who cares about anything crypto? You just want to go see price go
yes,
up,
I mean, Jeebus said, would I rather make? Do I care about if I make Larry Fink rich or if I make Barry Silbert rich? You know, like what's the difference? Like, yeah, you know, fair enough. Like we tried the crypto native-ish main characters and it went pretty terribly. So fuck it, give us to the suits at this point.
Yes. I mean, it's the saddest thing in the world.
The sellout message, yeah. Technical Roundup brought to you by Pfizer, BlackRock.
Shoot us an offer, by the way.
yeah, please do.
Oh, that would be so funny. People would lose their shit. Imagine that.
I mean, your bio is Vaxxed Matrix Agent, so I feel like you'd be super appropriate for that role, Don.
True, actually.
Like, hey guys, Casual Friday has been changed to Bug Friday. We're trying all these roach burritos. They've got all the essential nutrients.
I'm down. Call us up. Anyway, I think it's a good thing for price. I think it's not necessarily priced in, and I think it is gonna be relevant once it gets a little bit more concrete. And I do think the chances of this succeeding over everything else is like much higher. They just, like I said, have too much power to kind of like fail at stuff. Like at some point, like when you're playing in the big leagues, right? At some point, it's very hard to fail, and I think they're basically there. So I'd be surprised if this actually didn't work out. If not this year, then maybe next year. I mean, there's also just in general like the elections coming for America, right? And this is so stupid because we keep talking about like, the SEC, blah blah blah. That could change all of it, right? Like you have a new government, you have a new president, and if it's just across the aisle basically, then everything crypto related will change. And I think that's going to be really interesting. Like if it's not going to be a democratic president next year, I think it's very likely going to be a friendly one to crypto, just because now crypto has managed to get into this position where it's an issue, and in American politics, you're either like, if it's an issue, you're either Democrat or you're Republican, and then you have to either hate it or love it.
It does
and
seem split across party lines, like properly now, crypto,
Yes, and I think like this is how it's gonna go. Basically, like you're gonna have pro crypto people in the Republican camp, and you're gonna have negative in the Democratic camp, and that could change all of it, like the entire landscape again. And then we would have like a good narrative to run on. So this adds to that, I think. Like that would be the perfect kind of storm if we got the ETF and then we got Republican president. I think that would change a lot for us in crypto price wise. I don't necessarily want to say if that's a good or bad thing, but I think prices would go up. So most of us don't really care about anything else anyway.
Certainly at this point, right?
Yeah, like
all the ideologues are dead. Like,
yeah, they're either dead or they fucked off with their boats. And,
yes, true.
So I think that's definitely like something to look forward to. And like you said, I think there's much more of a likelihood that this goes through than any other.
Yeah. So we'll see how that changes. It seems like we're just keeping catalysts in our back pocket. Like the ETH deflationary meme is a really good bull market thing to have. Spot ETF approved is also a really good one. Republicans sweep something, be it presidency or Congress or the legislature. That also would seems viable catalyst wise. Let us cook, I guess. We'll be in a weird world if all of that comes to fruition. But at least the candles will be green and not red, and I guess nothing else matters.
Yep.
Awesome.
Which, it's the saddest thing. It frustrates me every time. Like when I think about how the space used to be full of idealists, and now it's just full of people that are greedy. But since I would count myself into the greedy camp as well, given I'm not really like the purest idealist anyway, I cannot say anything about it. But I can say that the people that we used to hang around with were, for some reason, like a little bit more into the whole why crypto actually matters over price of crypto actually matters. I think anyway.
I mean, price will.
That's just.
That's an effective conversion mechanism, Don. Number go up.
I mean, that's true.
Suddenly your ideals aren't so ideal. And your mind changes rather quickly. Like seeing all those threads about the DeFi dudes buying mansions and stuff. It's like, okay.
Great.
I mean, I'm not... Yeah. They should, but there are problems that come with that, especially if it's using kind of dumping useless governance tokens, and incentives are misaligned and all this other stuff. A debate for another day, I'm sure. That's all from us. Hope you enjoyed this episode of Casual Friday. If you did, leaving a like on the video before you click off would be appreciated. Leave us a comment with any feedback, questions, comments, concerns, or stuff you want us to address next week. We read all of them and are grateful for your feedback. Thank you to Woo for sponsoring the show. Go read their update about the fee revamp and the positive changes that will be coming down the line. If you want to try them out, there's a link in the description. And that's all from us. Have an excellent weekend, and we'll see you next week.